Whew. All right, all right, all right. Good afternoon, good morning, good evening, depending on where you're joining the stream from. I'm sure by now you guys already know the name, Adetola Freeman. And today we're going to be just looking through the markets with a focus on gold, all right? I've been running the stream for a little over 3 years now, or about 3 years, and I've found that majority of traders are curious about gold. Many of them feel stranded, some feel confused, all right? And today is the day that we're going to spend some good time, all right, talking majorly about XAU USD, which is gold. All right, so hello Alpha, hello Joan Antonio, it's good to see you. It's been a while. Clinton Nayega, it's good to see you again. You're here, my friend. Lovely. So we're just going to take a few minutes to wait for a couple more of our guys to join in. All right, and as soon as they do, we're going to be started. All right, we're going to be getting started. Let's see. Oh, the bride is here. Oh, of course, you can just you can reach out to me. I could connect you to my plug. Okay. Eunice Sanchoin, you're here. Lovely to see you again, my friend. Vibe Tunes, amazing. Amazing. Bright Ahiako, it's good to see you too. It's good to see you. You're welcome, welcome, welcome. I'm trying to see if there's a way for me to get some. The bride, I most definitely would be honored to. I would be honored to. Okay, let's see. Oh, this will work. Jermaine Delacroix, good to have you here, bro. Good afternoon. Who else is here? Please, if you're here, let me see your name in the comment section or in the chat box so that I can give you a shout out. Abdullah Musa, amazing, amazing, amazing. Good to have you here, my friend. I'm sorry, guys, don't mind me. I'm just trying to see if for the first time ever, all right, I'm trying to see if for the first time ever I could get a recording from my own POV. Don't mind me. Okay. All right, yeah. So M. Yusuf, King Videos. Lovely to have you here. Francisca Sani, it's good to have you too. All right, so guys, like I said, today we're going to be doing a lot of talking and conversation around gold. All right, so today is majorly going to be about gold trading. I know that in the next 30 minutes thereabouts, we should be getting the PPI. All right, if all goes well, but nonetheless, we're going to talk about gold. Of course, King Videos, we don't do these sessions without at least having 1 or 2 trades lined up. So, first things first, all right, guys, first things first, there is an entire library that we have created, all right, an entire library of strategies that the analytics department here at FBS have compiled together, all right. It is an amazing, amazing, amazing playlist. So you can click the link that I just posted in the comment section. In fact, it is pinned. All right. That video or that playlist is going to label out or spell out for you strategies and approaches that you can get yourself invested into. All right. If you intend to have a long-term career trading gold. All right. If you intend to have a long-term career trading gold. Let's see. Okay, yeah, so that is for learning the gold trading strategies. Now, while we're talking about that, I know a lot of you have questions about what exactly is gold trying to do? Why is gold bullish? On Monday during my live market analysis on Telegram, I talked about what I think I observed the gold to be doing. All right, so we're going to be breaking down a couple of things. King Videos, I'm assuming this is your first time on the call. If this is your first time, please type first in the chat box so I can recognize you and celebrate you. If this is your first time. Dean, good afternoon, my friend. You're welcome once again. So guys, please, if this is your first time, just type first in the chat box. I want to be able to know how many of you are, stepping in for the first time so that I can regulate my, my approach and give you guys what I believe would work best for you since you're just joining. Let's do this. All right, I want to believe you guys can hear me loud and clear, right? Okay, so let's get started. So on Monday, I was talking about what we are expecting or why gold is behaving the way it's behaving right now. And on Monday, I was sharing with the viewers, all right, my understanding of some of these things. Now, first of all, if you come here to the weekly time frame chart, or let's even do the monthly time frame chart of gold, all right, and you go all the way, this was 1996. All right, this was all the way far back, 1996. All right, you would see that it has steadily increased in price. Okay, that's the first thing. You can see that it's been in a bullish trend all along. All right, that's the first thing. Now, the second thing is this. You need to understand that gold is a physical material, is a physical, commodity. And because it's a physical commodity, it means then that, there are certain things that affect demand that affect gold. One, gold is limited in supply. All right. Two, the way inflation continues and, economies crumble, gold mining processes become more expensive. All right. That's two. Three, because of volatility in other currency pairs or other commodities, all right, there is a whole lot of need for gold because people use it as an edge against uncertainty and volatility in the markets. Then number four, which is where we now start to talk about current affairs. Number four, currently the shutdown of the U.S. economy or the U.S. Economic shutdown means that a lot of organizations and enterprises that currently trade with the U.S., with U.S. entities do not have the capacity to do that at the moment. And what does that lead to? It causes them to need to have alternatives, all right, because many of them are not certain how this whole shutdown is going to turn out, all right. So as a result, they are putting efforts into securing their investments by investing in gold. Number five is the fact that currently the U.S. is about embarking on, let me say, is officially on a trade war with China, all right, which, we're talking about the number one and number two global commerce, powerhouses in the world at the moment. So that is another reason why gold is increasing, because people, some will take a bet for the dollar, some will take a bet for China or the Chinese yuan. However, smart investors are, regardless of whatever country they are, banking on, smart investors are taking it a step further to also hedge their risks in, in gold. And that's one of the reasons why you find out that demand for physical dollar in Australia right now is crazy. All right, because the Australian economy is, they operate the Australian dollar, all right, which is very closely related to the US dollar. All right, so the volatility with the US dollar is indirectly affecting the Australian dollar economy. So as a result of that, a lot of their citizens are beginning to invest in physical gold. All right, so this is some of the reasons. But now let us strategically picture, if I want to trade gold, what should be my expectation? I'm just going to point out a few regions, all right, where if you are interested in catching a gold buy after the retracement, all right, I want to just lay it out for you. Or better still, let me do this. Yeah, that is much more properly defined. So let's zoom in and see what we're talking about here. So what I expect, all right, if we're looking for a retracement is majorly, my major, expectation would be somewhere around here. And I'm going to explain why. Now, when you look at this low right here, you're going to see that this low already, in the process of its creation, all right, it swept liquidity. All right, we can see that it swept the sell side liquidity. All right, because that low, the low from the bearish candle is slightly lower than the low from the bullish candle. All right, and after sweeping liquidity, we saw that price went ahead and did a bullish break of structure, created a bullish break of structure. All right. Now that there's been a bullish break of structure, it means that price is most likely expected to return to the other block that led to this initial break. All right, so we know that this is the other block right here, and price is likely going to be returning there. Do you get it now? So this is what we're talking about. Okay, this is what we're talking about. So when that's the case, all right, it means that if I want to trade gold more conservatively, of course, I would expect, first of all, to see a retracement, all right, and my emphasis would probably be more centered around buying from somewhere around here. All right, buying from somewhere around this zone. And another reason would be that I anticipate or expect that price would want to take liquidity from this lows. All right. So sweep liquidity come into the demand zone. I might probably just enlarge this. Yep. Sweep liquidity come into this demand zone, and then yes, we have a buy. All right. So that is my technical purview, or let me say my technical expectations, all right, from gold. However, we know that when we want to trade news like this, all right, we also tend to emphasize on fundamentals, okay? We also tend to emphasize on fundamentals. King videos, this is your first time. So I'm going to say, please just hold on, watch how we do it. All right, just watch how we do it. And then you can become familiar with how we run our things here. All right, because it's slightly different. Our approach is slightly different from what you're definitely going to be exposed to. All right, so I'm just saying, please hold on. All right, don't rush it. Don't rush it. We have a more relaxed atmosphere here, and you know, no much pressure. So there's a poll in the chat box right now. All right, what is your price target on gold? Guys, please type your price target down. All right, just type it in the comment section. Where are you expecting price to get to? All right, what is your price target on gold? To make it easier, I'm just going to map out some psychological levels on gold. Currently, gold is around 4244.39. All right, so that's our first psychological level, 4250. The next one, 4300. Then we have 4350. And then finally, we have 4400. So which of these price levels is your target? We have 4300, we have 4250, we have 4350, we have 4400. Which of these levels is your price target? Where do you think gold is aiming for? Just type it in the chat box. Quickly, let's get into it. Guys, type your price target in the chat box in the comment section. All right, let me see what you expect. All right, somebody's saying 5,000. Joanne, are you sure? 5,000 is a long ways off. Let me show you how far away 5,000 is. This is 5,000 all the way here. And that would be about 75,000 pips rather from the current price point. 5,000 is a long shot. All right, I'm saying 3.5, 4,450, 4,500, 4,300. Okay, 4,300, 2 votes for 4,300 right now. 4,350 is last, okay? 4,300 has 3 votes. 4,350 has 1 vote. 5,000 has 1 vote. Guys, keep it coming, keep it coming. Let's see. Just let me hear your thoughts. Joanne, I hope you see right now, that is 75,000 pips. That's a lot of pips. So we're going to just stay with, for me, let me tell you what, or let me tell you how I would interpret this. Okay, 4,350, another vote for 4,350, another vote for 4,300. Oh, come on. Antonio, someone said you're Trump's daughter. Come on. 4,300. All right, so a lot of us are saying 4,300. All right, 4,300. And that would be this right here. So I'm just going to change the color on that. I'm going to change that color to, say, purple. Now, let me explain to you how price actually moves. Let me explain to you how price actually moves. So when price gets to a psychological level, all right, it looks for reasons why it should either continue or drop. I'm telling you practically this is how price moves, all right? And that's why price moves in waves. Let me see if I can illustrate it on the screen. So price moves, all right, does its initial move, encounters a psychological level. Then when it gets to that psychological level, it checks if there is any demand or supply region around, solid one. If there are, right, it does a retracement. And then the next thing, it gathers momentum to break again. Organization Society, you already know we do this live. It's never a recorded session. And then it comes back here, then goes for the next psychological level. All right, so this is why price moves in waves. Why? Because it is tracking from one psychological level to another. And that's why you would see that right now, price is almost at 4,250. And as a result, it is already trying to start dropping. So I'm going to give you the psychological levels where price might want to drop from or might want to bounce off. So we have 4,200. I'm going to do 4,150. Okay. And then 4,100. So I need you guys to understand why I just drew this, all right? Remember, some of you already have price targets in mind, all right? Like I said, you're hearing 4,300, 4,350, 5,000, which means that when price gets to something close to that round figure, all right, once price gets to, you know, within a few inches or pips of that figure, all right, many of you are going to close out of your trade, which is smart. But smart money knows that this is how you will operate too. So that's why instead of using the psychological level per se, all right, they would rather use demand and supply levels that are close to those psychological regions, all right, or to those psychological levels. So right now we have a range, all right, this is the resistance, this is the support based on the two closest psychological levels. This is another support, and you'll see that it aligns with our demand level. All right, which is why I am saying to you today that if you see gold for any reason retrace this much, all right, it would be your cue to start looking for buying confirmations. All right, that would be your cue to look for buying confirmations. And if God gives you grace or strength, or you have the financial capacity, you can hold till next year. Why? Because we're entering the end of the year periods where companies do their final allocations, and as a result, a lot of organizations that are looking for tax relief and all of that, they will be looking towards gold, all right, stocking up on gold as, you know, as their profit, or let me say, as their dividends are being disbursed, so that they can bank those gold bars or bullion in a vault. All right, so usually towards the end of the year, there's a lot of increase in demand for gold as well. All right, so you guys need to be aware of this. So our targets for buys, all right, if you're a swing trader, would be around here. If you're a scalper, would be around 4,200. All right, 4,200 targets for scalpers to look for buy entries. Swing traders can look for buy entries from 4,150. All right, and remember, we trade psychological level to psychological level. All right, now to what we usually do, all right, which is our straddle approach. Adolfo's OKK, a psychological level in simple terms, all right, in simple terms is a level that is close to a round number, all right, levels that are close to round numbers, but are equally spaced, all right, and have acted as areas of support or resistance over time. All right, so they are round numbers, they are equally spaced, but if you observe over time, they have acted either as support or resistance in the past. All right, Adrian Trades, thank you so much, my friend. So for those of us who are here to trade straddle, I didn't forget about you guys. We're going to see if the PPI is truly going to get released, all right, by positioning and waiting for it. So first things first, our line chart, we want to see. I'll see you when you get there. I'll see you when you get there. I'll see you when you get there. Oh, oh. I'll see you when you get there. See you when you get there. I'll see you when you get there. Okay. Oh, come on. What did I just do? That should be it. All right. The gathering of Christ saints, yes, it is. It is absolutely possible. Absolutely abundantly possible. That's why if you check the pinned messages, there is a link to a playlist that contains different strategies that we have compiled based on years of experience, all right, for trading gold. So you can check that out. All right, so this would be our levels for EU. Let's see GU. Fi di da di da do, fi di da day. Fi di da di da do, di da day. Okay. Okay, good. So that would be GU, and then we're going to do UJ. Let's see. Okay. Gold. Tony, the truth is that for gold, we're going to be leaving out gold for today, all right? And our Straddle will leave out gold, and I'm going to tell you why. Because, like I showed you guys, gold is already at a psychological level, all right? So if I wanted to trade gold, I would be trading gold with a lot more caution, all right? A lot more caution. But for those of you who still end up wanting to trade gold, I think we can talk about that. It's already 1:30. All right, so if the news were to be released, it should already be happening right now. All right, but can you see? This is what they call a DOD. All right, this news is already having the basic signs of being a DOD. All right. Even if you go to the 1 minute time frame, you'll see that there's not much movement. All right, it's beginning to pick up. It's beginning to pick up. I'm going to tell you guys when you should enter a trade, all right? I don't want us to place pending orders this time around because the volatility is very, very sketchy, as you can see. It is very, very sketchy. So we're just going to watch to see. All right, we're going to watch to see. And what we're watching for precisely is going to be how price reacts. All right, if price comes into this zone and then begins to drop, all right, then I am going to be able to call out, a sell trade. All right, I'm going to be able to call out a sell trade. Sam, how come? Please explain to me how come. Total Styles, PPI is Producers Price Index or Producer Price Index, all right, which is an average of the cost of production as incurred by producers in the United States, all right? So there's not much volatility here. I don't know about GU, but of course it's still pretty much the same scenario, nothing serious going on. UJ, however, is moving, but I wouldn't say that's enough movement for us to want to get in on the trade yet. Okay, let's see. Let's see. There's a bit of a confusing atmosphere right now. Wow, sorry about that, Sam. Well, there's a community you can join. The link is in the description. All right, it's a Telegram community where we get to do, Mondays we have live market analysis or review. where we go over what exactly we're expecting from the markets for the week. Then on the group, you also see a lot of trade ideas, amazing concepts. You're going to get to see a lot of remarkable stuff. All right. Now, I want us to quickly take a poll. Ahmud, welcome. You're a little bit late, but I would say there's no news. All right, so Adrian Trades, come on, why would you do that? Zerubbabel Otono, I already gave my sentiment on gold. It's bullish. It's bullish. I already gave my sentiment on gold. It's definitely bullish. But we talked about the fact that if you're a swing trader, you might want to wait for price to return to any of these psychological levels to buy from. 4,300, that is the primary target that majority of us have voted on democratically that price should get to. Yes, coffee, the news has been delayed. So momentum right now is not actually at its best. Hassan Minas, there is no pending order set yet because I need to observe the market movement first before we try to capitalize on one direction or the other. All right, so there's a question right now that has been pinned. All right, there's a question that has been pinned in the chat box. All right, I want to hear your views, all right, or I want to hear your experience. What is the weirdest mistake you have ever made while trading? Adrian Trades, I'm sorry, those are not my trade ideas, all right, but I'm going to be trying to speak for them. Now, what we do as analysts is to give you an overview, all right? We cannot give you confluences. We cannot give you financial advice, all right? The best we can do is to give you guidance on places where you can look for confirmations from. Do you get it now? We give you an overview of places where you can look for confirmations from. And when we do that, the reason why we do that is because we operate under a licensed organization. All right, we operate under a licensed organization, and as such, licensed organizations like ourselves do not have the liberty to inform or to give our clients, all right, financial advice. Do you get it now? We're not at liberty to give our clients financial advice. And that is why you would see that the trade ideas shared do not usually come with, entry, stop loss, take profit. Now, for those of you who want to scalp gold or who are saying they want to scalp gold, remember there's a psychological level right here, which is the 4,250. All right. If price breaks 4,250, comes back for a retest, hit it on the head. Do you get it now? Now, Clinton Nayega, thank you so much for your contribution. So Clinton says his weirdest mistake is that he sometimes does not apply stop loss because he thinks the market will come back to his position. Now, I'm going to say something about that. All right. Okay, I don't know whether I should talk about that or not. But you see, you need to be careful if you don't want to trade with stop losses. It's a strategy, it's an approach. All right. If you're looking to trade without stop losses, it is possible. All right. It is actually possible. But there is a problem. And that's the fact that you do not know what exactly price is going to do. So those who trade without stop losses, they make use of things like edging, things like martingale. all right, another money management criteria to preserve their deposit. Do you get it now, Clinton? So please do not make that mistake anymore, okay? Organization society, how come? How did you allow that happen? Why? Ahmood, the weirdest mistake you make is that sometimes you do not trust, sometimes you trust the market and you don't secure your winners. Nah. Guys, everybody makes that mistake, and that's why I'm going to try to correct it. There is something called partial take profit. All right, there's something called partial take profit. How it works is that, let's say I have a position running that is maybe 0.2 lot size or 0.5 lot size. All right, there is a way you can close a portion of that trade. All right, there's a way you can close a portion of that trade and hold on to, whatever profit you've made. Another way to approach it is you can use break even. All right, you can use a break even stop loss to lock your profit in. Do break evens work? Absolutely. But of course, you're going to need to learn how to position your break even properly and when to position it so that you do not get locked out or kicked out of the trade. I wouldn't describe this as an impact on gold yet. I honestly wouldn't. However, I think it's going to leave room or make room for those who want to buy from this psychological level. If price retraces that far, it works. All right, Adrian Trades is saying partial take profit is not possible on 0.01 lot size. That is true. So since partial take profit is not possible, the recommendation would be that you use a break-even technique. All right? Kenneth Sampa, over-leveraging. Wow. Well, that is actually quite common. It's a common mistake. Sometimes we get greedy and then we look for means to, to just up into a trade, all right? Get involved. You don't want to miss out. It's called FOMO, all right? Fear of missing out. You want to jump into a trade, and some other times you get greedy because a trade is doing well, so you begin to stack positions, and sometimes you get too hopeful that a trade is going to play out well, so you begin to add positions even in negative, which is what we call martingale, all right? So I can relate, I can relate. Let me see. Adrian Trades. Your weirdest mistake was closing off because of a retest. You left with $15 profit, but after you closed, the market went to your initial TP, which was $55. Yes, Adrian Trades, if we had a poll right now about how many people such has happened to before, trust me, a lot of people on this call would raise their hands. All right? It has happened to me too. But this is what I'm going to tell you, Adrian Trades. It is better to be safe than to be sorry. All right? Better to be safe than to be sorry. In the world of performing arts, all right, they will tell you that it is best to leave the stage when the applause is at its loudest. Okay? These are things that you need to settle psychologically first. You need to understand that walking away with $15 profit as against $55 profit is not a loss. All right? It is way better than waiting for $55 profit and then the market reverses against you. So don't, because of that, build up a regret to a point where whatever happens, you decide to wait till price gets to your final take profit. And that's why, Adrian, I'm going to say again that my recommendation would be that you use a trailing stop. A break-even stop loss. All right? What does a break-even stop loss do? Let's say, for example, I start buying from somewhere around here. All right, let's assume I start buying from somewhere around here. And then when price broke above this high, I wanted to apply a break-even. So what I'm going to do is that as price has broken above this, all right, I can move my stop loss from wherever it was, all right, to just behind this low. Remember, I entered from here, so now I can move my stop loss to just behind this point, okay? So what that does is that it locks in profit such that if price were to reverse against me this much, I would already be out in profit, all right? Otherwise, I will keep, you know, just getting my profit, and it's always going to be there. ITT, can you please stop spamming the chat? All right, let me see. Adrian Trades, is it clear now? Do you now know how to break even? Does that answer your question? Are you satisfied now? Exactly, Ahmoud, amazing. Ahmoud is saying that he doesn't have that problem. He takes whatever the market gives him, strictly following his rules, which is how to build a strong psychology. All right, that is how to build a strong psychology. Adeoye Akije, your weirdest mistake is that your SLs are usually too tight and the loss accumulates even though the trades are good. All right, now let me give you this counsel, Adeoye. All right, since you say your trades are good, but your stop losses are too tight, you may want to adopt a different approach. All right, you may want to adopt a different approach, which is an approach where you target fewer trades. All right, fewer trades. Now, the reason why your stop losses are tiny could be because you're trying to spread a small account to cover several positions. All right, you want to use a small account to open 3-4 trades. Don't do that. All right, you can bring that figure lower, all right, and target how you can use your small account to open, say, 1 or 2 trades. 1 or 2 trades. It could be on a weekly basis, just 1 or 2 trades, all right? That way you allow the account to breathe first, all right, so it can amass power, it can accumulate and compound before you begin to stress it out, all right, before you begin to stretch it out, rather. So I'm seeing some of you say, oh, gold, the market is moving. Can you see? Would you describe this as a movement? That is why I'm recommending that you guys hold on and follow proper market structure right now. That's the only alternative that we have. All right, we just have to wait it out and allow the market stabilize first. Let me see. Sam Modequila says, trading 6.6% of your $300 balance in gold. Oh, Sam, how did you do that? That is very poor risk management. However, I understand it's a small account, all right? And when you are trading a small account, you tend to risk more in percentage. All right, it ends up feeling like you're risking more in percentage. And that's why the recommendation, let me say the general recommendation for small accounts is that if you're trading a small account, all right, you need to, it is mandatory, you need to reduce or minimize the number of trades you take. You need to reduce the number of trades that you take. All right, if you don't do that, you're going to get in trouble. If you don't do that, you're definitely going to get in trouble. All right, so please take note of that. Joachim, to your question, must you always start positions going into positive? No. And the reason why I'm saying no is because stacking positions is an art. All right, it requires a level of proficiency or a level of knowledge. So if you do not have that level of knowledge, stacking positions would always end up putting you in the negative. Do you hear that? All right, so for those who stack positions, it's usually based on order flow. There's something called order flow. If you have good knowledge of order flow, stacking positions would not be a problem. You will know exactly how to stack your positions, how to position towards it, and how to get out of a trade if the stacks are not working. AC miracles, absolutely yes. Can a stop loss be moved above the entry point in MT5? Yes, absolutely. Once your trade is in profit, you can do that. You definitely can do that. Let me see what other question is there. All right, Adrian is asking about the impact of leverage. So let me explain the impact of leverage. Remember, we trade in lot sizes. All right, we trade in lot sizes. Now, you must understand that one standard lot means 100,000 units. Did you hear that? One standard lot is equivalent to 100,000 units. So if I say I want to trade one lot of Euro USD, it simply means that I am buying 100,000 units of Euro USD. Now, the question is, do I have up to $100,000 to spend for one lot? If my answer is no, it then means that if I have an account of $1,000, if that's all that I have, and I want to be able to comfortably, conveniently trade one lot of Euro USD, all right, I want to conveniently trade one lot of Euro USD, I need a leverage of 1 to 500. All right, I need a leverage of 1 to 500 where my $1,000 will get multiplied by 500. All right, which would be what? $500,000. All right, so now, based on that, I can now trade one lot. AC miracles, you have to move the stop loss after your position is in profit. You have to move the stop loss after the position gets in profit. After, not before. If price has not yet gone in profit, you cannot move your stop loss forward. Josiah Nzube, you're welcome, you're welcome, you're welcome, my friend. So, AC miracles, you have to put the stop loss below your entry first. All right, you have to put it below your entry first, and then below if you are buying, above if you're selling, and then when price now moves in your favor and you are in profit, you can then move the stop loss to cover up for you. All right, that's how it's done. I hope you guys can see that there is no uniform reaction across board. All right, so it's better to just understand that there is no news today. All right, so we'll just work through some of the concepts that I feel I should teach you guys, and then we'll call it a day. But before we go to the next thing, if you are excited and you're learning, all right, if this session has been impactful, you're learning one thing or another, I need you to drop the fire emoji. All right, just drop a fire emoji in the chat box. All right, just drop a fire emoji in the chat box. Talk is cheap. Welcome, my friend. Odyssey Tomoy, welcome, welcome, welcome. It's your first time. I celebrate you, brother. Sam Modequilo, not using TP and wishing the market will push further. Like I said, Sam, if you are going to do that, you need to make friends with your, what's it called now? Your break even, all right? Your stop loss in the break even region. Adrian, I just resent it. Blackstone, thank you, thank you, thank you. Adrian, I just resent the link. You can check it. Keep the reactions coming, guys. Hey, Joe Boy, you're always with me. Thank you. Thank you. Ken Obuanga, my good friend. Welcome, welcome, welcome. Thank you. Lovely, guys. Lovely, lovely. I'm glad to see that you guys are learning. You guys are learning. Don't forget, we're still talking about the weirdest mistake you ever made while trading. All right, I want to hear from more of you. What are the mistakes that you have made in your experience trading that you wish you had known better? What's the win rate for the playlist? Well, when you watch the playlist, all right, I need you to understand that the win rate is generally between 50 to 65%. All right, between 50 to 65%. That is the range for those strategies. And why it matters is because if you have a 50% win rate, all right, and you are able to keep your risk to reward between 1 to 2, just target 1:2. All right, you're definitely going to be well off. Definitely. Definitely. The Gathering of Christ Saints. All right, now let me tell you what that is called. It is called catching a falling knife. That's what it's called. It is called catching a falling knife. So, you know, maybe you observe that the markets made a major move in one particular direction, all right? And because of that move, you are like, oh, this move is so strong, I think it's going to continue. And because of that, you enter a trade in that direction. You are not alone. You are not alone. You're not alone. You're not alone. I can promise you that. A lot of people have experienced that too. But I need you to know today that it is called catching a falling knife, all right? You're catching a falling knife. And it always, always ends badly. All right, if you have a small capital like $30, I think your lot size should not exceed 0.01. All right, it shouldn't exceed 0.01. When you get to $50, you can then begin to use 0.02 maximum. And if $30 is what you have, you want to keep your leverage between 1:100 and 1:200. Nothing above that. All right, 1 to 100, 1 to 200, nothing beyond that. L360 TV, you tackled a losing trade and you opened position with higher lot size. Yes, that's what we call scaled martingale. It's a scaled martingale, and it's quite unfortunate that a lot of people still approach it without the needed or the necessary statistical balance required. If you're going to trade martingale, you need to have some data-backed basis for that decision. You guys remember what I told you about gold? You can see gold just got to that psychological level and it started dropping from there. The psychological level at 4,150, or no, 4,250. All right, and it started dropping. Does it mean gold is going to keep selling? No. Trust me, no. All right, Adetola KJ, you mean you use volumes to check how strong the move is, the momentum is? If that's what you mean, then as good as that approach is, it doesn't work all the time. Or let me say that the accuracy is not so, the precision, yeah, that's the word. The precision is not guaranteed. So sometimes you would need to have a wider stop loss, but because you feel like, oh, it's an impulsive move, you end up using a tighter stop loss than you would naturally require. Josiah, impulsive trading, wow. That's why I keep telling people that you need to reduce the number of trades you take averagely. All right? You need to. If you take an average of 4 to 5 trades per day, I think you're doing too much. That's my own sentiment anyways. Some of you are scalpers, some of you are day traders. whatever rocks your boat. But for me, there are months where I take a maximum now, I'm talking maximum. There are months where I take a maximum of 12 trades in a month. In an entire month, 12 trades. Why? Because I am a swing trader. I prefer to approach the market that way. And the reason why I do that is because I have found out that by reducing the number of trades I take, I can improve my win rate. All right, so I'm able to improve my win rate by simply minimizing or reducing the number of trades that I'm taking. King Videos, this is MetaTrader. This is the MetaTrader terminal. As you can see, guys, there is no solid or clear move yet. Let's see. All right, mine is to move SL to entry after a little profit. It comes back, takes me off the market, and then goes in my direction. Good. Odyssey now, this is why I mentioned earlier what I said about using the break even. All right? We don't just break even randomly because we feel like. The break even is a tool. All right? Is a tool that you use to secure yourself. So how do I know when it is time to secure my trade? You need to see a structural change first. And that's why I was talking about understanding order flow. If you do not understand order flow and you're trying to use break-evens, you are most likely going to get it wrong. Of course, TradingView Terminal looks better for analysis, but I wouldn't recommend that. I wouldn't say it is the best for opening trades. Adrian trades, amazing. So risk $9 to win $20 on a $30 account. That works. That works. But remember, like I told you, that percentage risk is too much. It's too much. Because if you're risking $9, it means that after risking $9 on 3 trades, you are out of the market completely. And I'm sure that's not something you want. Of course, Forex is not easy. There is no money-making method that is easy. All right, there's no means of making money that is easy. For example, I am an African. I live in Nigeria. And there are jobs, or let me say there are tasks that people undertake that I wouldn't dare do. All right? Not because I am weak, but because for them, it is what they are configured, what they prefer to do, all right? And they can, they have a means of enduring it. So if Forex is what I am able to endure, if I'm able to endure the psychological turmoil, the mental stress, I think I'm good with it, okay? Josiah and Zube, yes, the platform you use for analysis is not as important as your knowledge of analysis. All right, Adrian Trades, if you have a $30 account, this is what I would recommend. All right? Generally, you want to start by risking $3. Generally. And what you're aiming for is how you can risk $3 to make $10 profit or $9 profit. Risk $3, which is 1:3. All right, risk $3, target $9 profit. So technically, you have 10 opportunities to mess it up. 10 opportunities. And if you can mess up your trades 10 times, there is a challenge. Odyssey, of course, I have mentioned it many times on this stream. If you have a small account, avoid gold. Gold is not your friend. Gold is not your friend. Gold is not your friend. Avoid gold. James Ogbolo, you're on a buy on gold. You're asking me whether you should close. Well, I didn't recommend the entry or the position, so I wouldn't know what to tell you. Adrian Trades, the strategy that I use for my trading is a strategy that I created myself. All right. There's a strategy I use for trading the news. There's a strategy I use for trading normal market structure or technical analysis. Both of them are strategies that I put together myself based on what I observed in the market. So guys, once again, if you're enjoying this session, all right, if you're enjoying this session, I need you to please give reactions in the chat box. All right, just give reactions in the chat box. Let me see. King Videos, the strategy I use is called the Templar's trading strategy. Templar's trading strategy. That's the strategy I use. It's a bit of smart money and retail trading. Like I told you guys, if you have a small account, stay away from gold. Stay away from gold. Gold is going to show you pepe. Stay away from gold if a small account is all you have. Adrian Trades, I'm going to just give you a walkthrough of how my approach sounds like. All right, I'm just going to give you a walkthrough. First, you want to find pivot regions, daily, weekly, whichever one rocks your boat, all right, daily or weekly. But I prefer to work with the weekly time frame because I use the 1 hour time frame for my entry. If you're doing daily, it means you are looking at entering from maybe 5-15 minutes, all right? So based on the pivot regions that I find on the higher time frame, I break down the market structure on the lower time frame, 4 hours, all right? And then I look for entry confirmations on 15 minutes, 1 hour. Okay, so that's the run through of how I trade or how I find my trades. Sam Odequilo, of course, my strategy works nice for small accounts, but you will still need to understand proper risk management. Yes, Coffee, you can open a cent account. If maybe you have $30 and you want to practice, good position sizing, my recommendation, open a cent account. That would be 3,000 cents, all right? So if you have 3,000 cents, it gives you more room to use, better risk management. All right, Adrian, let me repeat that. But once I repeat it, I need to see plenty fire emojis in the chat box. First, I go to the weekly time frame if I want to trade from the 1 hour time frame, or I go to the daily time frame if I want to trade from the 15 minutes time frame. All right, those things. Then after that, once I've done that, once I've gotten my pivot regions, I go to the 4 hours time frame and I break down the market structure on the 4 hours time frame. Okay, once I find the structure on the 4 hours time frame, I map out my other blocks, the regions that I need to see. All right, then finally, what I do is I go to the time frame of entry. If I used weekly zone, I look for entry on 1 hour. If I used daily zone, I look for entry on 15 minutes. All right, that's literally how it works. Sam, you want to start learning Templar strategy? You will not find it anywhere. You most definitely will not find it anywhere. Chris Machokoto, yes, at the beginning of this stream, I already addressed your question. All right, at the beginning of this stream, I addressed your question by explaining that we do not have the license to give financial advice. What we can do is to share with you an idea, a vision. All right, your entry, your stop loss, your take profit is all on you, is at your own discretion. So on the FBS Telegram, we do not give signals. What we give is trade idea. We just show you our own perspective, how we see the market. and then you are at liberty to decide how you want to approach that vision or what role you want to play in that vision. Thank you, thank you, thank you. Lovely, lovely fire emojis. I can see. Woohoo! So guys, if you're learning, you're enjoying the show this afternoon, I need you to just drop fire emojis. Just drop fire emojis. All right? I want to keep my head hot. I wish I had palmed hair, or probably, this fried Jerry calls. I could just run my fingers through the air, run my finger through the air, like all those actors in Nollywood. It's too late to apologize. It's too late. I'll say it's too late to apologize. Yeah, Daniel, sorry, I saw your question earlier, but I think I forgot to respond about it. If gold breaks above 4250 with a full candle, I wouldn't say the buy is certain. What I would say is, if gold does that, I will wait for price to return to 4250 or the other block responsible for that candle breakout. All right, I will look for the other block that led to that breakout, and that would be it for me. Witness Aaron. No, sir, I do not. 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 Rotesco. We only take analysis requests on the Telegram calls, which happens every Monday. All right, that happens every Monday. So this is a stream on YouTube, so we do not take calls here because there's no way for you to unmute your mic and ask your questions. But on Telegram, you know how we do it. You guys can literally unmute your mics, tell me how you feel about the analysis or whether you agree with it or not. So that's why we only take analysis requests on Telegram, okay? I need to see price break above this psychological level before I can give us an entry. If price has not yet broken above that psychological level, I will not be able to give you guys an entry. So let's see how this plays out. So once price breaks above the psychological level, I can give you guys an idea of places where, you can work with us. All right, to enter the buy on gold. Adrian Trades, yes, it is. The name is available on Google. Just search the name on Google. You will definitely be able to connect. Katende Marvin, I've not seen you in a while. Well done, well done. Welcome, my friend. Let's see. Coffee, thank you. Don't forget, guys, tomorrow is Friday. By Monday, we're going to be having a version of this kind of stream on Telegram. But that version is more robust because you can unmute your mics, speak with your normal voice, all right? Voice your opinions and tell me what exactly I can assist you with. We also take questions and answers, all right? So trust me, that is a meeting you do not want to miss. It's a meeting you do not want to miss. Every Monday, 2 p.m., we do that, okay? Yeah, and for those of you who want to connect with me, my Instagram is public. You can always search the name Adetola Freeman. The Instagram is just there. All right. So do I have any other question in the chat box before we call it a day? Any other questions in the chat box? Any other questions in the chat box? I think I'm going to take maybe 1 or 2 questions. Just give me my money. Okay, Coffee, you want me to show you an example of another block entry? I'll do you one better. I will explain what another block is. Is that okay? Coffee, is that okay? Should I explain what another block is? All right, Adrian asked the same question. So let's get to work. Now, we know that institutions make orders, all right? They come in with orders, right? And we know that as a result of the orders that are coming from these institutions, all right, which is what we call smart money, we know that as a result of the orders that these guys are bringing into the market, it often changes the direction of the market. So let me show you what I mean. It means that if the market was coming down initially, all right, if an institutional order comes in, what is supposed to happen to that downward movement? Type it in the chat box. If an order was initially, if the market was initially coming down, if prices were trailing down, all right, and then an institution makes a buy order, what would happen to the direction of the market? Let me hear you in the chat box. Adrian, in what direction would that go? Abdul Fattah Abdavinzi, believing a strategy will work all the time. Exactly. A lot of us made that mistake too at the early stages. Adrian Trade says it's going to be a reversal with a fair value gap. Brilliant answer. So what are we saying is an order block? An order block is simply a move, all right? If you are looking for how to discover an order block, all right, you want to look for a move that broke structure, all right? And in breaking that structure, there was a fair value gap. But I'm now going to add a tiny bit of information to it. All right? Now, this reversal and break of structure tells us that there was an institutional order block. All right? Meaning institutions took a trade around that region. But how do we find the particular candle? The particular candle that is our order block. I'm going to tell you what that candle is. So what you're looking for as that candle, all right, is pardon my drawing. You're looking to see the candle, the last candle, the candle at the bottom of that of this move, all right? This point here. All right? This point here at that low. You're looking for a candle that swept liquidity, all right, from the last candle before the break of structure. All right? So you see that this particular candle, you see that it swept liquidity from this candle. How? The low of this candle is lower than the low of this candle. Look at it. The low on this candle is lower than the low of this candle. And as a result of that, we call this particular candle, the candle with the lowest wick, we call that our order block. And then we mark from the low, from the high to the low, if it's a demand order block. Why are we marking it? Because, like you can see, there's a fair value gap. So the order block created the fair value gap that came to break structure. So what do we now expect will happen next? We expect that price will come back to fill the fair value gap, sweep liquidity, and not go below the order block. We expect that price will not go below the order block. So price can stop before the order block. It can stop inside the fair value gap. It can stop after the fair value gap. But what we expect is that price will not go below this order block. Why? Because if there is a move that is powerful enough to reverse the institutional order that came from here, if there is another order that is powerful enough to reverse it, it would mean that this order is stronger than this order block. This order block is stronger than this order block, correct? And if that's the case, this becomes our new supply OB that we expect that price will not go above it. And that becomes what we refer to as a protected eye. This is what we refer to as a protected eye. All right? A protected eye is an eye that is created by an order block after a sweep of liquidity or a liquidity grab. All right? Adrian trades, now you know better, so drop me some fire emoji. So the link, you want the link to this live program? I already shared the link to the Telegram, all right? I shared the link to the Telegram in the chat box. But if you want the link to this particular one, let me also share that. Designer Kennel, yes. This is my private account. Sorry about that. That account was suspended from streaming, so I had to create a new one. Thank you, Sakili. Let me see. Juan Antonio. Yes, for this scenario, that will be the only candle that we will take as our order block. But there are scenarios where your order block will be dependent on two candles. That's usually based on candlestick formation. Probably you have an Arami or you have an inside bar. There's a way that you can just sift between those two candles. Adrian Trades, videos on retail trading. The link is already pinned. All right, I pinned the link at the top. Let me see. Someone said gold has broken out on the 1 hour time frame. I hope you know what a breakout is. This is not yet a breakout. This is what? It is not yet a breakout. The candle has not even closed yet. So to call it a breakout would be an aberration. But let me quickly show you guys what I just explained, all right? Talking about the order block using this 15 minutes time frame. Should I use trading view? Hold on, let me see if trading view would be a better option. All right, I think it is. You have captured my heart, consumed my heart with your love. Oh, you have captured my heart. You've consumed my heart with your love. All right, guys, so let me quickly show you what I just explained about the order block situation, okay? So look here. You check for it on the time frame of entry. So here we have a sweep, then a break of structure. Can you see it? Sweep, break of structure. Oh, thank you so much, Ezra FX. Thank you, thank you. We have a sweep, a break of structure, and then if you come further, you would see that we have liquidity sweep. And what happens next? Price returns to the demand block that gave us the break of structure. After the liquidity sweep. Now, let me now explain how we would approach this right now. All right, let me explain how we can approach this new situation that gold has presented. Now you see that gold has given us a sweep. You can see that a sweep, a break. All right. So at this point, our instinct would be to use this as our entry, which can be streamlined to this. I should have used 15 minutes. Yeah, it would have been clearer on the 15 minutes. Can you see? This is 15 minutes time frame. Can you see the fair value gap? That right there was the fair value gap, price returned into the demand block. You see why I was saying that those of you who called that a break of structure, you need to be a bit more careful with the way you approach trading. So for me, I would wait to see a very clear break. All right. This would most likely be my fair value gap. And if that's my fair value gap, the next question I should ask is, where is my liquidity inducement going to be? All right, because I need an inducement or a liquidity sweep before I can take this trade. So if I'm able to get a liquidity sweep before price returns to this block, then that will be my confirmation of entry. Scalp trading is for algorithms. It works best for algorithms. If you're not an algorithm and you're a human being that needs sleep, that engages in other things, swing trading is my absolute recommendation. As and Minas, there's no news, so it's difficult to give any of that right now. Yes, Joan Antonio, if price completes that breakout, all right, if price actually completes that breakout, yes, we can conclude and say that will be our other block, and then we can enter the trade from there. All right, so all of the entries now depends on the break of structure. Where did I map the OB from? Now, this recent OB, right? Adrian, you're asking about this current OB, right? Guys on TikTok, my battery is low. I'm gonna have to go offline now. But the session is still live on YouTube. You can join us on YouTube, FBS Analytics and Education, okay? All right. Let me see. So Adrian, I was responding to your inquiry about why I marked that point as my order block. If you come to the 3 minutes time frame, you would see why. This is the candle that swept liquidity from all the candles before it, right? But inside this candle, we have this candle, right? Which would have made my order block this. But inside that, we have this, which is my 3 minutes order block. All right. And this is more reliable because you can see there's the 3 minutes fair value. You can see that the 3 minutes fair value gap is more evident. It's more obvious here. Do you see it? It's more obvious here. Ahmud, this that you're seeing is not, I'm not using it to signify Elliott wave. I'm just using it to show the trajectory that I expect price to take. All right. I'm not using it to show Elliott wave. I know what you're talking about, but I'm not using it to depict Elliott wave. I'm just showing you the trajectory. I'm not mixing them up. Okay. So that's the other block. All right. The fair value gap is more visible, and that gives me room to label this as my liquidity or the inducement. Remember, on the 15 minutes, we've not seen liquidity yet. All right, we've not seen liquidity yet. So now on the 3 minutes, we can see liquidity. We can see the other block. We can see all the zones that need to be seen. All we are waiting for is to see the clear break of structure. Sense or nonsense? If it makes sense, I want you to drop the love emoji in the chat box. Just drop the love emoji in the chat box. Love emoji, love emoji, love emoji in the chat box. Lovely, 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 lovely. I'm going to be done in the next 2 minutes. The next 2 minutes, we're going to call it a day. We're going to call it a day. Thank you, guys. Thank you, guys. Namaste. Yeah, so for Juan Antonio and every other person that wants to reach out to me, my Instagram is open. You can always send me your questions, your inquiries, whatever it is that you want us to talk about. Remember, the current psychological level we are aiming at is 4250. All right, we want to see a clear break above 4250, and then we would wait to take the entry from this other block. All right, so thank you so much, guys. Thank you so much, guys. It's been an absolute pleasure hosting you guys on this call. All right, the name is Adetola Freeman. My Instagram is open to take all your inquiries and questions after the session, provided that it pertains to what we have done here, the things I've taught here, the things we've discussed here. All right. Yes, Adrian, it has to be with a body, a full break with a body. All right, so thank you so much, guys. It's been an absolute pleasure. Love you guys from the bottom of my heart. And I can't wait to hear your success stories and your testimonies, okay? Have a beautiful rest of the trading week. God bless you.